Welcome all. This is Anavadhya Rajesh, Assistant Professor, Department of Commerce, Self-Financing, Afternoon. Today we are going to discuss about the term management accounting. In this section, we are going to discuss about meaning, definition, characteristics, functions, tools and techniques used in management accounting, and major advantages and drawbacks of management accounting. First one is meaning of management accounting. The term management accounting is consists of two terms, management and accounting. It means that it is the accounting for management. Management accounting is a branch of accounting which provide essential accounting information to the management for taking efficient decisions and making their day-to-day activities more efficient. Next one is definition. Institute of Chartered Accountants of India defined management accounting as management accounting is the presentation of accounting information in such a way to assist management in the creation of policy and day-to-day operation of an undertaking. We mentioned earlier that management accounting is mainly concentrated to provide adequate financial information to the management for taking efficient decisions and thereby increase the efficiency of an undertaking. Next one is characteristics of management accounting. First one, providing financial information. Management accounting always concentrated to provide adequate financial information to the management for taking efficient decisions. Next one is cause and effect relationship. Management accountant always try to establish a cause and effect relationship after making financial statement analysis. We know that the major financial statements used by a accounting is balance sheet and profit and loss account. In management accounting, management accountant always try to keep a cause and effect relationship. For example, in case any loss incurred, the management accountant tries to identify the reason behind the loss. In case any profit incurred by the firm, they are also always aware about the factors which affect in the profit of an enterprise. Next one is providing information, not decisions. The management accountants always try to provide information, not decision to the management. We know that every concern is different from their nature. So the management accountant always tries to provide the accounting information to the management for taking efficient decision and not providing any decisions to the management. Next one is achievement of objective. We know that every organization has its own objective. So the management accountant helps the management to achieve their objectives by providing efficient financial information. Next one is decision making. Management accountant always tries to take efficient decisions by analyzing financial statements. Next one is no fixed conventions and standards. It is the major drawback of management accounting, which means that management accountants always analyzes the financial statements based on no conventions and standards. This is considered as the major drawbacks of management accounting. Next one is improving efficiency. The main purpose of management accounting is to provide adequate financial information to the management, which helps them to increase their efficiency in day-to-day activities. Next one is functions of management accounting. First one is planning and forecasting. The major function of management accounting is to make proper financial planning and budgeting, which is essential for a management to achieve their objectives. Next one is financial analysis and interpretation. The major function of management accounting is to analyze the financial statement and make a proper interpretation. The major financial statements used by a management accountants are profit and loss account and balance sheet. In management accountant, management accountant deals on analysis of financial statements and make proper interpretation based on their analysis. Next one is modification of data. It is the function of the management to rearrange the data as required for a management for taking efficient decisions. Next one is controlling. Management accounting helps the management to control the various activities to identify the deviation between standard performance and actual performance through variance analysis. Next one is coordinating. Budgeting, financial analysis, and financial reporting are the major functions of management accounting. So, through these major supportive activities, management accountants always tries to coordinate the various activities of management which is required by an organization to increase their efficiency. Next one is decision making. As we mentioned earlier that the major advantages of the management accounting is it helps the management for taking efficient decision. So the major function of the management accounting is to provide adequate financial information to the management which helps them to take efficient decisions. Next one is controlling. Management accounting helps the management to control various activities by analyzing standard performance and actual performance. In case there is any deviation, the management accounting always try to correct the variations based on certain variance analysis. Next one is communication. Management accounting always try to keep a communication between management. So they provide adequate information to the management, which is essential for them to take decisions through proper communication. The example for communication is management information system and management reporting. We can explain the terms management information system and management reporting in further slides. Next one is use of qualitative information. Management accounting always tries to keep a qualitative analysis like case studies, market surveys, and productivity reports, sales analysis for taking efficient decisions. These analyses are essential to conduct in an organization for making efficient decisions. Next one is the tools of techniques used by a management accountant in management accounting. First one is financial planning. We know that the major objectives of any organization is to maximize its profit. So maximization of profits is only attained through proper financial planning. So the management accounting helps the management to make proper financial planning through the proper planning and budgeting. So the management accounting's major tool is to financial planning, which helps an organization to achieve their profit. Next one is financial statement analysis. We know that in management accounting, the major statements used by a concern are profit and loss account and balance sheet. The financial statement analysis helps the organization to analyze various financial statements and thereby to acknowledge the rate of growth of concern. So the proper financial statement analysis helps the organization to analyze the growth of business concern, and the financial statement analysis is made through common size statement, comparative statement, and ratio analysis. Next one is cash flow analysis. The cash flow analysis majorly deals on movement of cash among different periods in an organization. So it studies the cash flow from the organization and cash flow out to the organization. Next one is budgetary control. The management accountant always uses budgetary control for planning and controlling various activities of an organization. And it is an important technique in directing business concern through an efficient decision making or through an efficient positions. Next one is cost accounting. Cost accounting always representing the product-wise, process-wise, or department-wise data. The cost accounting is essential for completing the management accounting. The management accounting always proceeds from cost accounting. So, a organization should maintain efficient cost accounting to complete their management accounting analysis and taking efficient decisions. Next one is fund flow analysis. Fund flow analysis is conducted to identify the movement of funds in an organization, the fund which is arrived to the organization and the fund which is arrived from the organization, and to analyze the funds arrived to the organization. It is essential for identify the working capital changes in the organization and the fund flow of the organizations to identify the efficiency of organization and thereby taking efficient decisions regarding fund managing. Okay, next we move to management information system. The free flow of organization, the free flow of communication between the organization is essential for taking efficient decision. So the free flow of communication within the organization is essential for effective functioning of a business. So the management can design the system through which every employee of an organization can access the information and to discharge their duties more efficiently. Next one is statistical techniques. We have already discussed that the statistical techniques are essential for completing the financial statement analysis. The major statistical techniques used by a management accounting are least square, regression, and quality control, which is essential for an organization to taking efficient decision and to achieve their objective. Next one is management reporting. Management reporting is a system of management accounting in which every person in an organization is to communicate their management regarding various problems faced in an organization. So under management reporting, the management accountant is preparing the report on the basis of contents of the management, and it is really essential or it is really helpful to the management for making improvement in their functioning and thereby to achieve the objectives of an organization. Next one is standard costing. Standard costing is the establishment of standard cost under most efficient operating condition, comparison of actual with the standard, calculation and analysis of variance in order to know the reason and to pinpoint the responsibility and take remedial action which is helpful to the management to cost control. The standard costing is a technique in the cost accounting which deals on the standard and predetermined cost, the reason which behind the variation between standard cost and predetermined cost or an actual cost. In standard costing, here the calculation and analysis of variance in order to know the reason for variance between the actual performance and standard performance, and this aspect is necessary to take proper decisions regarding the management affairs and to increase the efficiency of organization. Next, we are moved to advantages of management accounting. First one, it helps to increase the efficiency of functions of management. The major advantages of management accounting is it helps to increase the efficiency of management. Here, the management can increase their efficiency by acquiring financial statements and take proper decisions. And it ensures the efficient regulations of business activity and establishing efficient system of planning and budgeting. We know that every organization's main objective is to maximization of profit. So management accountant provide proper financial planning and budgeting which helps the management to maximize their profit. Next one, it is useful in controlling wastage and defects. We know that the resources are scarce. So the proper management accounting helps the management to reduces their wastage and defects and thereby to protect the resources. Here the control techniques mainly used as determining the standard performance and actual performance, and in case if there is any variation, taking proper remedies for covering or correcting the variations. Next one, it helps in complete communication between all levels of management. The major tools used by a management accounting is proper communication. Through proper communication, the problems which is faced by a concern can be easily removed by comparison of another techniques. Next one is it helps in controlling the cost of production and thereby increase the rate of profit. It always helps the management to control their operations and coordinating various activities, thus result in increase the profit of an organization. Next one is limitations of management accounting. First one is management accounting always depend on financial accounting and cost accounting. We mentioned earlier that the cost accounting and financial accounting is essential for accompanying the management accounting. The managing accounting is incomplete without conducting proper financial accounting or without following proper financial accounting and cost accounting. And next one is decision taken by the management accounting may or may not be executed by the management. The major objective of the management accounting is to provide adequate financial information to the management for taking efficient decisions. The decisions which is executed or may not be executed by the management is the major drawback of management accounting. Next one, it is expensive. Management accounting is always be expensive. So it cannot be followed a small organization. It is only applicable to large scale companies or large organizations. Next one is it is only in developing stage. So the concept techniques are tools are not imperfect. We know that management accounting there is no proper fixed standard or conventions. It is in developing stage. It is a major drawback of management accounting. So the tools and techniques which is used in management accounting are so not imperfect. Next one is it to provide only data, not decision. The major limitations of management accounting is that it is only provide adequate information to the management, not decisions. The major decisions taken by the management should be varies according to the nature of the organization. Okay, in this section we deals about management accounting. We know that management accounting is a branch of accounting which provide adequate financial information to the management for taking efficient decisions, and management accounting always focus on providing adequate financial information to the management and thereby to achieve the objectives of an organization. The major drawback of management accounting is that it has no definite techniques or tools to conduct financial statement analysis. The financial statement analysis helps the management to take efficient decisions. And the management accounting always depends on financial accounting and cost accounting. And it provides only data to the management, not helps to provide decisions to the management for increasing their efficiency. Thank you.